All right, everybody, I want to go over why I did the VLO recommendation. So, the recommendation is to sell a put credit spread on VLO, currently on 818, it's trading at 119.59. And we're looking to sell a put credit spread. That's where you sell a put and then buy a put at a lower strike price. And we're going to be selling the 100 put and buying the 95 put all the way to September 16th. So if you look at the chart here, currently we're at 119 and change. The low was a bit lower than the 100 strike, but it was at 96.93. However, if you look at the moving averages here, the green moving average is a simple moving average of 10 days. The blue is a longer term moving average of 50 days. You can see how the green moving average just crossed over the blue one. So the momentum in the short term is upward, as you can see that in the share price in the last week or two. Been having some pretty good days. Now it could have went on a higher strike price than the 100, but looking at the 100 strike price, we're looking at a delta of 0.09, so it's a pretty low chance of it getting down to that level. If you wanted to take a little bit more risk, you could look at the 105 100 put credit spread or even 110 105. However, those would be a little bit more risky based on having a lower cushion. So again, that's just my quick trade idea. Sell the put credit spread, sell the 100, and then buy the 95 put on VLO for 916. I got filled at $32. I'll look to close it at $5 or let it expire worthless.